Mr. Donalds is recognized for 5 minutes.
Thank you, Mr. Chairman. I want to highlight legislation that I plan to introduce soon that addresses some of the key issues we're focusing on today. And I would love to gain support from some of my colleagues on the other side of the aisle. Often we say things like in America, folks have an ability to pull themselves up by their bootstraps. And that's something I really do agree with. There is a definite possibility to do that in the United States. But I think it's important to understand the reality is that some people simply don't have boots. And I think that while we can agree that homeownership is one of the most stable ways to build wealth in America, there are barriers that exist for many Americans and the necessary steps in order for them to actually enact on homeownership. There's a lot of discussion and excitement around leveraging alternative data to promote financial inclusion and safely and responsibly expand credit access for people who struggle building credit in the United States. In 2020, a number of years after the project commenced during the Obama administration, Secretary Carson published an initial report which examined the impact of reporting public housing tenant rental payment history to determine whether it would address the issue of credit invisibility, which is prevalent among many people, specifically and especially people who tend to be in remote rural areas and in urban corridors. These findings showed that rent payment can improve both credit visibility and the number of those who score above 620. It also revealed some ongoing challenges. The legislation I'm working on is designed to follow up on this study. It would allow tenants in certain public housing authorities to opt into a pilot program that will allow their rental data to be collected. Rental payments are not considered in credit scores. And this legislation would allow for low-income Americans to build their credit file. Mr. Firth, do you believe Congress should support legislation that leverages alternative data for more housing pathways?
Thank you, Congressman. It's a great question. I don't study mortgages, so I don't want to get too far out over my skis here. I think it's a really important thing to think about. And I think it's really important to think about kind of the potential unintended consequences. I like the idea that you're allowing people to opt in because there's a lot of tension between the idea of giving people credit for their rental history with also, the potential damage caused by having an eviction in your past, which would then be part of your credit history and would be a negative. So I do know there's a lot of Americans currently renting houses that if they had a mortgage on, they would pay even less and they'd be building equity. And that situation really seems backward. So it certainly seems like there's work to be done here, and I applaud you for doing some of that work.
Okay. Second question to that: How would legislation like the Credit Score Competition Act, and I'm not sure if you've actually viewed it, but I'm asking anyway, which directs the Federal Housing Finance Agency to create a process where new credit scoring models can be validated and approved for use by Fannie Mae and Freddie Mac when they purchase mortgages in home ownership? Like, how do you think that would probably impact this discussion we're having right now? And Mrs. Bailey, if you want to chime in too, you're allowed to as well. Mr. Firth,
I'd rather pass on that and allow some of the other smart people.
Ms. Bailey?
So a home rental payment is the most equivalent thing to a home mortgage payment. And you're absolutely right that rental payment history is something that should be factored into whether or not a family could afford a home. And as I answer your question, I need to address this issue about subsidies. We've subsidized home ownership in this country for white families at a rate disproportionately to families of color. In the first 35 years of the FHA insured program, only 2% of FHA insured mortgage loans went to black families. That's $120 billion that those families had access to. That's not counting the subsidization of the developers that have been supported through those programs. So when we think about credit scoring and what's factored into credit scoring, one of the largest determinants of your credit score is how much of your actual credit are you utilizing. A family that has been locked out of homeownership over generations doesn't have savings for a down payment. So they are likely going to use a higher percentage of their credit scoring in the purchase of their home, meaning they're going to have a lower overall credit score because of that history of discrimination. So that's how those subsidies work and how they manifest in things like credit scoring. So rental payment history is indeed the very thing that we should look at to determine whether or not a family is able to actually afford a mortgage. And FHA actually has allowed the GSEs, Fannie Mae and Freddie Mac, they've actually started to actually look at rental payment history.
Ms. Bailey, and I don't want to cut you off. I'm really running out of time. I got like 10 seconds. Mr. Chairman, if you'll indulge me.
Go ahead.
Okay, thank you, Mr. Chairman. To follow up on your point, I want to make sure people understand, and remind me, it's been a while since I've dealt with FHA loans. What are the current criteria or the previous criteria for actually being approved for a mortgage loan with FHA? Just generally speaking, I know there's obviously large parameters, but generally speaking, what is the criteria?
FHA is a great program. Most borrowers can be approved for a mortgage with a 3% down payment. FHA is the thing that built the American middle class. It just built the middle class in a way that it favored whites, and it told African Americans, Latinos, AAPIs, and Native communities.
Quick
that they
follow-up, Ms.
couldn't
Bailey. I
access.
know the chairman is really indulging me now. Quick follow-up. Is there a minimum credit score applied to the FHA program that your credit has to be above, or is it just purely having a 3% in order to access the program?
No, there is a minimum credit score, and I don't want to speak off the cuff. I know that it's typically at about 620 and below. So, I'm sorry, 620 and above. So those families who utilize the FHA program actually typically have loans with credit scores that are less likely than some of the credit scoring that might be used to secure loans by the government-sponsored lending process, Fannie Mae and Freddie Mac, which typically use credit scores at about 720 and above. And in today's credit market, we actually see, because of the investments and subsidies we've placed into homeownership since the onset of this crisis, that we actually see the GSEs mostly funding lending opportunities for the wealthiest of Americans. So homeowners who
Ms.
actually—
Bailey, I got to get out now because now I'm really gone long. Listen, I do appreciate the points that you're making. The only counterpoint I would make to you is that, we do have to be careful. As somebody who worked, I worked in the mortgage business and in the loan business for a very long time. The down payment and the credit scoring portions of loan applications are critical. I would challenge that they're not so much discriminatory in terms of race. It's much more about ability to repay and a way to shape a loan. But we got to get out.
They bake in the history of
we gotta-
discrimination, and I think we both can agree to that.
Thank you so much. Mr. Chairman, thank you for your overindulgence. I do
The
appreciate it.
gentleman's